Morning. I lined it up. I lined up the interview with Mark Faber. I talked to you guys about that a while back. Let's see. I'm good there. Okay. Thank you. Sorry, I'm hearing about the snow somewhere. Somebody said 4 feet of snow here at Fort Drum, New York. I cannot wait for my move in March to warmer weather. There you go. Here I come. Yeah, Hunter Army Airfield. Is that where you're going? Are you going down to Savannah, Georgia? Who knows where you're going? But I just tell you right now, me, I actually got to talk to somebody who's worked at Drexel Burnham Lambert before. To give you more background on how I found Mark Faber, Mark Faber is he has a website, and his website is called the Doom, Boom, and Gloom, or the Gloom, Boom, and Doom .com. So he's an author who actually, as an investor and being the main guy, he actually told his investors to pull out of the market right before the crash in '87. And he knew when the markets were going to blow up, and he's calling for the markets to blow up now. As in the thumbnail, you guys can see he called for a 50% drop on markets. He told me 70. He told me 70. We're going to watch the interview together. Okay, I got my bag of chips. I got my drink. I have it. It's one take, no edits, no cuts. It was just straight. Hey, he called. We talked. He tried to put his video up. His video wasn't working, which is not a problem for me. The issue is, this is why your video won't work. If you're trying to record and or stream on something else, the video won't work in the Discord as well. So what do? I know the truth. I said, don't worry, I got a picture of you, man. I'll put that up. But it was a good conversation. We talked for 32 minutes, and it was worth every minute because I actually learned like the way some of these guys think, the mega wealthy and the investors. And something like this, when you see a potential crash coming, and what are the indicators for it. So I'm so happy we had this conversation between he and I. I learned some things about him. He was essentially, just for you guys that don't know, he was the Mike Milken of Europe, the European markets, during his time at Drexel. So, hey, let's hear it. Let's watch it. And I appreciate you guys so much. By the way, good morning, guys. We'll talk about the markets and everything else in a bit. But let's watch the interview. Peace. Well, guys, welcome back. Welcome back to Marant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. I am joined today with Mark Faber. He is the editor and publisher of the Gloom, Boom, and Doom report. That is at www.gloomdoom.com. Apologize for that, Mark. But good morning, good evening, Mark. How are you doing today, sir?
I'm fine, thank you very much, and I hope for you the same.
Thank you, Mark. I know you're joining us from abroad, and I just want to say thank you so much for your time. We're going to talk about the markets. I know that you're well known for predicting the crash of '87 and then letting your investors know to get out of the market at that time. And my question is, what do you see in these current market conditions for the U.S. market right now? We're 1 week into the new year. What do you see coming forward on 2025? Do you think we're in that same bubble?
Well, there are similarities and differences. The similarity is that the market is euphoric. People are very optimistic, and that's usually not the best time to buy when everybody is optimistic. I would argue that the best buying opportunities occur when participants are very negative. Say, you look at Hong Kong until, say, 3, 4 years ago, people were always very optimistic about China and Hong Kong. And now you can't read anything positive about Hong Kong and China. And these markets have come down a lot and are now reasonably valued. I mean, in Hong Kong, you can buy property stocks at a huge discount to their asset value. Now, I'm not disputing that the asset value can't go down. It will go down, but not that much, because the discounts on the net asset value are frequently 70, 80%. So I
Yeah, so
think if you want to find good value, you have to buy assets that are neglected and overlooked. And if you want to buy expensive assets, you buy assets that are in the limelight. Say the Magnificent Seven at the present time or the FANG and FANG-related stocks in America.
Right. Well, here's my thing. I tend to think the Magnificent Seven is overvalued at this time. And when everything gets reset, let's just say we had a correction on the market, is it safe to assume everything comes down, but debt doesn't come down. People can't make debt disappear. So I think it's only more, it costs more to do this business. So I'm curious as what market conditions do you see for 2025, 2026 that would say, you know what, we're in this bubble? What do you see?
Well, I think that the markets are forming a long-term top. The first top area was in 2021. I mean, officially the market peaked out in January 2022 and then proceeded to go down about 20%. But a lot of stocks had peaked out in early 2021, like the SPACs and the meme stocks, the Capricorns and so forth. So I think we're going to go down from here. And I suppose that the most popular stocks like Nvidia and Tesla and so forth, which are widely held by the public, that these stocks will go down substantially. I mean, in the order of 70%. That would be my view.
Wow. Wow. I come to the same conclusions, but for different reasons. And I've been following a lot about private equity. Now, I know you've come from the world of your days at Drexel, and now you're independent. But I've seen a lot of the peers that were there now with these new financial tools they have. These private equity's tough. They can win in any market. So is it safe to assume your money's good if you're Apollo, if you're Carlyle, or is everyone under this pressure?
Well, this is a very good question. What is safe in an inflated asset bubble? In other words, we are today in an inflation that wasn't very pronounced in consumer prices over the last 40 years, say 1980 to today. But we had very powerful asset inflation. So assets are very expensive, whether that is residential real estate or paintings or collectibles like Ferrari cars and so forth, and fine wines and whiskeys and so forth. And stocks in general are high. And I think all that will be deflated massively in a asset deflationary period. Now, exactly when that will occur, I'm not sure. But I think that monetary policies are now relatively in a difficult position because if they print money, then consumer price inflation will accelerate. And if consumer price inflation accelerates, then interest rates will go up. And a lot of assets are priced or have been priced for interest rates to go down or be at a very low level. They haven't been priced for continuous, relatively high interest rates. I mean, for me, interest rates today are not high because in the 70s, they were always above 6% and went to over 20% in 81. But relative to the last 15 years, interest rates at the present time are relatively high. They're low, but they're relatively high. So I think the system is going to be very vulnerable. And I'm questioning what is safe because in an asset deflationary period, everything comes down. But obviously, some things come down less than others.
Well, wouldn't that create wealth inequality? When I think about these moments, 99, 87, even 29, these asset classes and everyone, social classes, they have huge disparities. And if we're going to see that moving forward, I'm nervous for a lot of people. They're buying precious metals. They're doubling down right now. A lot of people are, but that's why I see all this cash on the sidelines. So I'm just curious because I know you have this info or this knowledge, this idea that private equity firms are not allowing their limited partners to pull out cash right now. Have you heard anything like that, or do you understand the difficulties of that?
Uh, I'm not an expert about private equity because I invest nowadays mostly in liquid securities. In other words, in the stock markets, in the bond market, in commodity markets, where I can buy and sell. I don't want to be in illiquid assets. But it is clear to me that private equity will have some problems.
Wow. Wow. I woke up this morning and the bond, 10-year bond was actually all the way up to, on 10 years, 4.6, almost 4.7. Where do you think the breaking point is there for bonds versus equities?
I think this is a very difficult question to respond to because interest rates on bonds could be 10%, and if inflation is 14% or 15%, then interest rates are still negative in real terms. In other words, interest rates would be at 10%, inflation at 15%. So it would still pay for you to essentially borrow money because interest rates would be negative, inflation adjusted. So to answer your question, the breaking point will be when money becomes tight. And it hasn't become tight yet. There's plenty of liquidity in the world. And that's why you see these speculative excesses like massive moves in cryptocurrencies or massive moves in one day in some speculative stocks in the US.
Wow. Wow, that's a good way of looking at it. I never thought about it like an infinite, the interest versus the actual bond rate. I always think, well, this is a fixed interest rate for the next, quarter until the Fed figures out what they want to do. But I'm looking at it in a different way. I look at like things like cryptocurrency, and I tend to think they're the hedge to the market. Like if institutions are using it as collateral to balance their book. You ever think maybe they could fall out, and if everything does fall out, and that's the first thing to fall?
Yes, you have your view, I have my view, so I don't see any problem.
Yeah. No, I'm just curious because you've always called it, right when it's happening, and now more than ever, it's like right in front of me. Like this market is top heavy, as we call it. Where there's like 10 companies that make up 40% of all earnings, and the P ratio for the S&P is the highest it's been since 1999. Things just look more expensive than ever. So that's why I was
Correct.
really focusing on
Valuations
you.
are at a very high level, and the technical picture is not particularly good, nor is the global economic outlook particularly good, nor is the inflationary outlook particularly good. So, and yet the public is more bullish than ever before in the last few years. You understand? We're very, very biased towards the long equities, and that I question that the market can continue to go up at this level.
Yeah, that's good. I'm looking at companies with zero debt. I try to focus on companies that aren't going to be I guess, in despair if something were to fall out. So at least they have cash on hand, they don't have debt, and they have a plan. That's what I'm looking for. And it's tough to pick those companies, but I heard you say you're focusing on things that are illiquid. So that's fine. I do have a question. I know I don't. I never want to keep you that long. I know that we're up late in Taiwan right now, but Mark, I ask you, sir, about your time. You've been in the markets how many years now? 50 years?
Since 1970.
Wow.
Actually,
Wow.
before, because as a student, I started to invest in stocks.
So, if you don't mind me asking, I'm just curious, like, because I do study study like KKR. I study Drexel. I study Apollo. I study a lot of different financial institutions that have survived and or didn't survive, and how they all went down or how it all fell apart. If I'm not mistaken, you were on the international desk at Drexel when you were there.
I was in the international department, but I had business to do with high yield bonds also and commodities because I was running the Hong Kong and Singapore office
Wow.
of Drexel.
Yeah. So I
Actually,
read.
I set it up. I set up
Yeah.
the business there.
Wow. So you're familiar with the whole. I don't want to use the term junk bond, but there's some high yield bonds out there, and it was used as
Yes, high yield bonds.
and it was used as a tool. And I know that you're there, but like somebody like Mike Milken, like when they were saying all these things about the '80s, because I study the '80s a lot, and Ivan Posey in the deal. So Ivan Boesky, I'm so sorry, but the idea that a junk bond is like a loan shark or a high yield bond. Do you? What's your view on that? I'm just curious.
Look, companies, they have bonds that they issue. And if the industry falls on hard times, like the high yield bond market existed before, but in the 70s, real estate companies uh, became very depressed, and real estate investment trusts, which had started to exist in the late 60s, early 70s. And so the bonds on these depressed stocks also went down in value, and they were kind of perceived to be very risky. And as a result, uh, these bonds were trading at huge discount to par value. And Mike, he started to make markets in discounted bonds, and he did it very successfully. But it's not something new. In the 19th century, all railroads in America were in receivership or went bankrupt. And so these railroads in America, and by the way, also canal companies, including the Erie Canal, also went bust.
Wow.
All these companies had bonds outstanding that were trading at large discounts. And the smart operators bought up these bonds because they had a high yield. So the high yield market is a natural phenomenon within a marketplace.
Wow. I
But
know
what
that.
then happened,
Yeah. No. Go ahead. I'm sorry.
excuse me?
No. Go ahead, sir.
So what happened in the late 70s and 80s, Mike and some competitors began to issue bonds for, say, relatively questionable companies. These companies didn't have a rating because the rating system in America is a very bizarre affair. But some of these companies were actually promising companies, like telecom companies and so forth. And Mikey financed many industries by doing that. And then casino companies began to issue these bonds. And so the universe of junk bonds, or what you would call high yield bonds or lower quality bonds, triple Bs, expanded dramatically. And as is the case in an investment mania, uh, the quality of uh, the object of speculation over time deteriorates. In other words, like the SPAC stocks in America until 2021, many companies issued shares that shouldn't have gone public in the first place. And so by the late 80s, there was a crisis in the junk bond market or the high yield market. And Drexel Burnham had some liquidity issues and went bust.
Wow. Wow. That's why I like talking to you guys who've been around for centuries. No, and I don't mean that in a bad way. But
Thank you.
yeah, you
Thank
guys
you
have.
for revealing my age.
Yes, sir. I'll hide it, but my thing with the whole market and the way I see it right now, I've seen some companies recently borrow money on a bond that's far outdated, and I guess the plan is to extend and pretend. A company like Carvana borrowed billions of dollars, 4 billion, $5 billion, and their percentage is like 10%, 11%, and it's not due anytime soon. So is this a customary during like these high yield times? Because even the fixed Fed rate, I know you said it's not high compared to decades ago, but I think we're just accustomed to the 0% and go to the markets and everything's up and to the right and it's all free. Do you think we're going to be in this window that 5% is the norm, 10% is the norm, and we just have to get used to doing business this way?
Well, there is a short-term view and long-term view. I think the economy is in recession if it were properly measured. And I measure it by, say, looking at the finances of 70% of households. 70% of households in America and in Europe. When I talk about America, I talk essentially about the Western world, are in recession because their cost of living has increased more than their salaries. So the standards of living for most people are actually going down. Now, they're not going down for wealthy people, including myself, who are asset holders, because say last year asset prices still went up quite a lot, especially say if you own bitcoins or gold, then you made a lot of money. And that creates the wealth inequality, not the collapse. The collapse of assets usually rectifies some of the wealth inequality. At the present time, we have in some Western countries like America a record wealth inequality because the wealthy people have become, thanks to expansionary monetary policies, immensely rich. And people who don't have assets, the middle class and lower classes, are not participating in the asset inflation. You understand? If you don't own a house, you're not participating. If you don't own stocks, you're not participating. So this creates this wealth inequality. And I'm saying that 70% of households, if you look at the statements of companies like Dollar General that show essentially what the typical household does, the typical household had to cut back even on life necessities like food. Same in Germany, by the way. And for wealthy people, food is not an expenditure. It's very small. Say if you earn $10 million a year, how much you gonna spend on food?
Yeah.
You may spend a lot on drugs, of course, but not on food. The wealthy people actually eat less because they want to stay slim.
I like all of this. Well, there's a reason why I gained 40 pounds this year. No, I tell you, to hear it, Mark, from your point of view, gives me an idea that you know it's only going to get worse before it gets to the bottom. I see them pumping.
Much worse.
Yes, sir.
Much worse.
I see them pumping markets. I've seen them all, and we talked about China moving in when we first started here, and I'm not too informed on China, but I do know that they had the housing crisis via the Archegos debacle of 2021 to now. So I'm curious if you think that was ever, if there's ever been a breaking point in that housing crisis for China, and the impact it would have nationally for even for the U.S. markets.
Well, I think the real estate crisis in China is pretty much localized. I mean, it's a Chinese problem. But the whole of Asia has a kind of a real estate prices no longer going up. Now there may be exceptions like India and so forth, but in general, property prices are rather drifting lower. But I have to explain something that most people overlook when you deal with real estate markets. Let's say you are an uneducated person in Indonesia or in Thailand and you make some money. So what you're going to do with that money? You buy first a house, then you live in a street with other people and so forth, and you buy a car maybe, and some of it on credit, and then usually people like to buy insurance policies because they have children, and then they accumulate more money, and then the question comes up what to do with money. They're not educated. They have no idea about stocks. You understand? 95% of people in the world wouldn't know anything at all about financial markets. But what they know is the house that they bought and the house of the neighbor and the neighbor opposite on the street and so forth. And so to get an idea of the value of homes in their area. So if they have money, what they will do with these savings is initially continue to buy real estate and they're not going to go and buy IBM and Nvidia and so forth. They buy essentially another piece of land and consider that to be a store of value. Most people in the world that are uneducated, they will also buy some gold because they consider it a store of value. And if there is an emergency, they can sell the gold right away. They can go to all over the world, there are gold dealers, and they will buy and sell gold. And it's interesting that when the gold price rises strongly, people, when they are in trouble, they sell their gold right away because nobody sees it. If you have a car and you have to sell it, or because it is repossessed, your neighbors will see it, so you lose face. They're not going to sell it. Also, your house, you try to keep it because the neighbors would see it, and the people, your children would have to move to another area, and so forth, and so on. So these are things that people actually keep. But the gold reserves, nobody sees it. So there is a selling pressure on gold as soon as the price goes up.
Wow. That's that makes me think about my own position. I have securities that I won't sell, and I don't. I think the other way around, right? Like I'd sell my car before I sell my stocks. It's just the way my mind works because I refuse to sell my assets that
I don't
appreciate.
have a car, so I have nothing to sell. I have
Yes.
motorcycles.
Oh, you live in the life. You live in life. Hey, my last bit of questions here because I know that we're on a time crunch, sir. But my questions are about a company like Nvidia, where the whole world loves it, and they do an accounting practice called mark to market. They front load their contracts and their revenue the minute they sign them, whether they receive one payment or not. It looks like the accounting is the issue for a company like Nvidia. Certainly, when one of their customers is being investigated the way micro computers is doing it. Are you familiar with super microcomputers?
Yes.
Okay. Super microcomputers is being investigated for doing business with related parties and having fraudulent accounting practices, and they're up to be delisted on the NASDAQ by next month. What do you think about this in the relationship to the Mag 7, certainly like NVIDIA, and where everyone's doing market to market, mark to marketing? What's your idea on this?
Look, every mania every investment boom, every investment bubble is accompanied by fraudulent practices. And the more the bubble expands, the more fraud and swindles and shady behavior proliferates. Now, I don't know when, but sometimes in maybe not the so distant future, a massive fraud will be revealed. And when the massive fraud comes to the surface and into the public's attention, it can be a catalyst to a market decline.
That's perfect. That's the perfect answer because it looks like that's what's happening at the moment. But I guess we need more
I'm
time to
sure
pass.
there is a lot of fraud in the securities markets and also a lot of fraud in cryptocurrencies and so forth.
Oh,
So
yeah.
be prepared for the revelation of a massive fraud. I'm not talking something small, but massive.
Yes, sir. Yes, sir. Well, Mark, I want to thank you for your time with me this morning, this evening. You know, I'm on Californian time. It's 6 a.m., but I'm up early, and I want to thank you
Okay.
for answering back and me reaching out. And if you ever need anything, you know how to get a hold of me. But I thank you for always making yourself available to the public.
Well, thank you very much for having me, and I wish all your viewers and listeners a successful year. I think there will be a lot of volatility and unexpected events, and I would not bet that asset prices always go up because one asset class has clearly collapsed, and that is commercial properties. And until about 5 years ago, people of wealth, they all owned some office building somewhere and so forth because the rents were relatively attractive and commercial properties gave the owners less headache than residential buildings. But now they all collapse in value.
Wow, wow. Well,
Even if you have low interest rates or money printing, not everything goes up during money printing. Some things go down.
yeah, I got something for you, Mark, because I know I know the markets have like we have three ways to go, right? Like even for administration, we can print money, we can do tax cuts, or we can lower interest rates, or a combination of the two. So I think they're always just going to keep printing money because no one really wants to face the issue at hand. So I mean, when does this really stop?
Well, I think in a democracy, the politicians that would advocate conservative fiscal and monetary policies, they're not going to go and get elected because they would have to advocate higher taxes or lower spending. And the public that votes, they like all economic policy measures that will lead to inflation, namely, they like subsidies, they like contribution of the government to their children, they like tax rebates, they like everything that leads to a larger deficit. But they don't like measures that reduce the deficit, which would be essentially tax increases, but they would have to be massive with the current deficit or do massive spending cuts.
Yeah. Well, Mark, once again,
So
I want to
money
thank you.
printing is money printing. Every society in history, when things began to deteriorate, printed money. Everyone, and they all went down. Then eventually, it takes a while, but it eventually they go down.
Well, to the title of your website, thegloomboomdoom.com. Mark, I really want to thank you for giving insight on the markets today, the conditions of the U.S. market specifically. And for me, I just keep buying what I buy. I buy GameStop. It is a meme stock to some people, but to me, fundamentally, it's a sound investment. And I'm going to see where I end up on that spectrum. So I just want to thank you so much for your time, sir.
You're welcome. Goodbye.
Thank you, sir. Good night. Bye-bye.
Bye.
All right, guys, that was the interview. And I'll clip it and I'll get it up live soon enough. It was a fun time, fun experience to hear someone give out some insight on the markets. He obviously has a lot more experience than I do, but I know what I'm reading, I know what I'm seeing, and I know that we go into detail individual securities like supermicro computers, like Nvidia, like GameStop. So we're pretty confident with what we're doing. But yeah, if it all works out the way he says, then hey, we're going to be okay because we have some really good assets out there, you and I both. But the part that really stuck with me was, and thank you for that, Michael. There are some people out here who have YouTube channels and platforms, and they don't have constructive conversations about current market conditions. You can pump stocks, you can pump ideas and crypto coins and everything else you want to do. But for me personally, I need to know the other side of the token, like the other side of the coin. And the reason why I want to hear it and plan for it is because when it does happen, I don't want to be surprised. I want to know, hey, this is why it's happening. So I've been trying to figure out how the cake is, baked and what they're baking in now. So right now what they're baking in is everything positive, even Trump tariffs. If you don't think that the next administration tariffs have any flex, you have to look at Canada today. I know that Trudeau's stepping down, and they were supposed to announce their financial targets for the year, what they're going to hit in Canada. And Canada's underwater, guys. I've told you why Canada is, and nobody believes me. Everybody thinks I'm crazy on this. The largest investors into private equity are Canadian pension plans. The Canadian Pension Plan Investment Board is a massive investor into Apollo Global Management, Carlyle Group, Bain and Company, you name it. I don't care which private equity firm you do. But private equity is not letting go of their money. So there are no returns to be made. I don't know why they're not letting go of their money. I don't know what side they're short on. But if Canada is short this market and or short something, and they're upside down, they're stressed there. The stress is there because the fear of what Trump will do with tariffs. Trump has gotten this right for a long time. He's always said, you're going to pay for tariffs and you're going to pay for your own security. And he's going to charge the UN. He's going to charge anyone. Because I was deployed. I was deployed to a theater where 25,000 active duty soldiers work in Korea. And I'll tell you what, the infrastructure for Korea is just U.S. driven. I'm talking about the whole damn country. But who pays for that? U.S. taxpayers pay for that just to have a territory to hold up a 48th parallel. So there's no wiggle room here. I'm asking why Canada's doing what they're doing and why they want to name a new prime minister. But at the same day, you have Andrew Tate saying he's going to run for UK prime minister. Everyone's trying to get into the next step and trying to use their leverage because they think they are Elon Musk. They think they do have the relationship with Trump that they have for these platforms. I watched the scariest interviews ever this week. I watched an interview about this kid who allegedly blew himself up in that Tesla truck in front of the Trump Tower. And when I watched that interview, it said he has all the info in the world for war crimes and the drones that are flying over the U.S. right now and where they really come from. And I was just blown away. I'm just like, dude, this. I live in the Matrix. I live in an enigma because with all these distractions going on around me, I just want to buy more GameStop. Guys, I went to GameStop yesterday. I walked into my local GameStop. They're not allowed to talk to you about the external things that happen within the company. I promise you they're not allowed to. Some people do that. In our Discord, which is completely free, we have employees for GameStop, FaceTiming, sending videos. That's okay. I'm not going to say anything if you don't. Like, hey, Ryan, chill out on these employees, okay? I know there's Operation Security. I get all that, but let me tell you something, my man. We're GameStop investors. We're just here to chill. All right. No, I don't condone it. But I will tell you, I walked into my local GameStop and there was not one card protector. There was not one sleeve that you could buy, one top loader. There was not one pack of cards for Pokemon. The whole thing was gone. There were no Elite Trainer boxes for Pokemon. There were only plush dolls to buy. The cards were gone. They did have an increase in sports cards. So, of course, your boy, the avid GameStop guy that I am, I bought them. But I'm getting really ready for this Q4 number for GameStop. I know that GameStop has a new launch coming out this week for Pokemon. And it's the Prismatic EX or EV Prismatic. And there's no limit to the pre-order, but it's all there. I'm going to open up these right now. Why not? Hey, don't worry, guys. My next giveaway, you're going to love it. I haven't told my wife yet. I told her, I said, hey, I want to go up to Big Bear. I want to do the snow. And she said, you're not going to find any kids to give anything to. Just proof that I'm pulling them out all. Okay? All right here. Boom. They're right here in front of me. But, and TikTok, I see you guys. So the thing was, my wife says, what do you want to do? I said, baby, I want to go. I changed my mind. I don't want to go to the snow. I want to go to the Grand Canyon. I want the backdrop of the Grand Canyon, and that's where I want to go to hand out free stuff to the kids and to families out there that are visiting the Grand Canyon. I want to show them that GameStop even goes to the Grand Canyon. So I'm planning it out. And it's only going to be like a day trip. Literally going to drive out there early morning, whatever, do my thing. It's only about 4 hours away from what I know. I've never been. So I plan on doing it, okay? Let's see. I'm happy you guys like that conversation so much. Let's see if I got anything crazy in here. Nope, nothing crazy. But I got some cards that I'll put into sleeves. I did not watch any football yesterday. Oh, there's a player for my man. Baker Mayfield, Tyrone Sproles, nope. All right, we got a Gridiron all-time card. Gridiron Gang card. It's Brian Urlacher. Brian Urlacher. Feels kind of good. Got a Jaden Daniels rookie card. What is this, bro? I'm like, that guy's connected to my hip, bro. Every pack I open is a Jaden Daniels rookie card. I swear to you. I don't even know what to do with this guy. I'm going to start throwing him away there. I got to send him to my boy. I always say I'm going to send you something there, Carter. And I'm working on it. You just don't know. Yeah, about the housing crisis in China. Yeah, the problem was the builders were selling houses that weren't built yet. That was the problem. So, and Vince Ferragamo for the Rams. Look at that. I never Vince Ferragamo, man. What the hell kind of old school ass card is that? So I got a Vortex rookie card. Vortex rookie card. It's that Rome Ondunze guy. We'll do it. Brendan Allen. No. So Jamar Chase. Vortex rookie card. That card looks nice. That's going to somebody. It's going to a kid somewhere. Yeah. Anyway, we got still look at the markets. I still have charts to look at. I still have things to do. I'm just opening cards because this is how I pass my day. I support my company. Let's see. Travis. I got Travis Kelce, C.J. Stroud, Jalen Hurts, Justin Fields. Dude, that's 3 quarterbacks in a row. That's crazy. Devon Achane, tomorrow. Let's see what this one is. Jalen McMillan, Elite Series rookies. Right here. All crazy. McMillan, yeah. Kalen Robinson, Jeff Garcia. And Joe Namath, the most overrated quarterback in the NFL Hall of Fame, without a doubt, does not belong there. Terrible, terrible quarterback, by the way. You can pack up those Chicago Bears cards with the T-shirt and send them my way. RP, I can. I should. You know, I mean, I'm down for it all. Let's see. George Kittle. Scary Terry McLaughlin. Drew Bledsoe, the best Adam Thielen, Dan Marino, Stephon Diggs, Eric Dickerson. But for the Colts, not the Rams. For the Colts, not the Rams. Now that sucks for my buddy. J.J. McCarthy rookie card on the White Hot rookies. Nope, don't really care. This was a terrible pack for me. Buda Baker, Jerome. Yeah, I never get any good Cowboys. They never. Oh wait, there's got to be good Cowboys for me to get good Cowboys. I'm sick of Jerry Jones, by the way. Jerry Jones, he's lucky I didn't get on my Twitter yesterday or my TikTok. Ooh, I dropped a pack of cards, bros. Let's see. Can I get it? I'm gonna get up and get it. There we go. Yeah, Jerry Jones. Hate that guy. Jerry Jones said he is not aware of the incentive for the quarterback to play Cooper Rush. If Cooper Rush plays, he actually gets $250,000 more on a contract incentive. He claims he didn't know that, and he named Trey Lance the starting quarterback yesterday for the final game of the season. He made sure that Cooper Rush didn't get that $250,000 extra. I thought that was a bullshit ass move. Wow, right on cue. Danny White, guys. Oh, I love this card. Okay, that's one I'm not giving away. Oh man, I love Danny White. You guys know the story about Danny White? Anybody know the story about Danny White? No? Danny White is one of the greatest quarterbacks to ever play for the Dallas Cowboys. He was the punter on the team as well. He actually had over 3,000 yards punting and 3,000 yards passing, almost 4,000 yards that year. I think it was like 1981. Danny White went to 3 NFC title games. He could have been that guy, but he couldn't beat Joe Montana, right? Just a couple of the catch and all that stuff. But Danny White was him. Danny White's the last quarterback to play multiple positions. He was the punter and the quarterback on the team. You couldn't imagine that today. Danny White's a damn legend. Over 20,000 yards passing and 20,000 yards punting. Oh, Danny White. Who's this? George Pickens on the action. On some action pack. I don't care about that. Bro, I'm looking for autograph cards. I'm looking for downtowns. I'm looking for... They give me... These packs, bro. A report for attendance. Appreciate you guys. We can re-immense in 10 years about the hype, or what you would have called it. Yeah, we could have. We could do that. Oh, let's do this. Last pack. So far, for me, nothing amazing. I don't know the value of the cards, but I don't really care. I'm just going to give them away anyway. Jim McMahon, Russell Wilson, Brock Purdy. 3 quarterbacks in a row. Goodness gracious. Will Levis. I got an orange card, the press proof. Trey Hickson on the orange. Who cares, dude? The guy sucks. Oh no, this was a bad box for me. Daniel Jones and Aaron Rodgers. Oh, it's all right. A good box for the kids. I'm gonna be giving all those away. All right. I have a Blaster Mosaic football waiting for me at home. I'll post any good pulls on the Discord. Yeah, that was it. That was my Blaster box for Don Russ. I used my $5 coupon. So I did. So I went in there, dropped a little bit, and I'm okay. I have a snow day today, no work. Anyone else? Minty Fresh Turds? It's never snowed here a day in my life. But it's 10 o'clock. I am hopeful because I want to go hiking today. Remember I told you I want to work on my weight and I want to work on grinding again? I think I'm going to do it after I pick my son up from school. And I think I'm going to go for a real hike, a hard hike tonight. I got to get this out of my body. And I know I need to. I know I need to do about like 10 miles. Remember that I do hikes and they're uphill the majority of the way. It's not like I'm just walking through the wilderness. Like I'm literally going up. But it's tough because it gets dark early. And then there's coyotes everywhere. I saw a pack of coyotes the other night while I was driving. Yeah. What do you think happens with Riley's for earnings? Riley's what? I don't know what that question is, Julio. Help me out, okay? No such thing as snow days. Get you a 4x4. No excuses in what we say in Boston. No excuses what you say in Boston. No excuses. Get a car. There's no excuses. Hey, I hope you guys really did like that interview. That was weeks in the making. It was hard to get a hold of him. I challenge anybody to go get a hold of Mark Faber. Thank you. And thank you, Carter, for that. But I was reading the Twitter remarks. But yeah, so it made me really think about markets, period, and what's the view of the U.S. market right now. Obviously, everyone's, like he said, euphoric. They're all spending, they're all buying, and it's really crazy because if everyone's bullish, if everyone's leaning one way, you're looking to just get taken out at the top. What are my red flags for seeing on stock prices? My red flag right now is Nvidia, without a doubt. The next one is going to be earnings for AI. I saw an ad on Bing. So I use a search engine Google, but then it forces me to use Microsoft Bing every now and then. And there was an ad on there, a paid advertisement from CoreWeave. So I don't know why CoreWeave has paid advertising, or why I would assume they would do enough business. They borrowed $7.5 billion on a bond from Blackstone and the group. So I don't know why. I don't know why these guys are advertising, using money that way if they already had customers. But, people building up infrastructure for these data centers. Now, Apple says they're going to spend $80 billion for data centers this year. This year, $80 billion. I'm sorry to tell it to you guys. Apple doesn't have $80 billion. So, to spend, I should say it that way. If we go look at Apple, then we'll go and look at the balance sheet. Cash and cash equivalents, cash. They have $27 billion cash. So Apple has $27 billion cash. How the hell are they going to spend $80 billion? Like, that's the part. They're willing to spend, and this is like their CEO and financial people, they come out and say this stuff, but their total assets at Apple, just so that we're clear, are about $160 billion total assets. So how in the hell are you going to spend half of what your total assets are worth on infrastructure? That means you're trying to increase your total assets by $80 billion. So you're going up how? What happens then as you spend? Like right now, we're looking at these markets, okay, guys? And you see Apple 244, still down from its all-time high. You see GL, Globe Life. If you guys remember, they did a hit piece on these guys out of Muddy Waters, and it went all the way down to $38.66 from 120 and some change all the way down. It fought back the next day, and it came cruising all the way back. It actually fought back the next week, and it came cruising all the way back. And now it's not moving like it was before. It's not down in the 30s. It's back up to 113. They just announced today they're going to pay a dividend. That was announced today. A 25-cent dividend. Imagine buying a share at $113 and you're getting 25 cents dividend. Is that a lot? 0.85 yield on the year. No. It's not where I want to be. It's not where I'm getting $1 dividend per share and they're 113 apiece. How about NVIDIA? NVIDIA hitting all-time high numbers that they'll finish out higher than they've ever hit in their lifetime. This is a 30-minute chart at 152.16. NVIDIA has been just slamming its way all the way to the top. I think this is like these are the days where you look at each other and you go, how the hell is this happening? How in the hell is this $3.71 trillion? Apple 3.7. NVIDIA is the most valuable company in the history of the world right now. It's not something that I would want to buy. I don't want to say history of the world because Apple, like 2 weeks ago, was 3.8, 3.9, but this one's right up there. They're going to hit $4 trillion. It's not fair. Here's a retail company turned into a apartment complex. No, Costco's fine. Amazon 227, down from that historic high of 233. But how far down are they? Everything's getting pushed back up. Abercrombie lost it all. They lost $40 a share. That's 20%, guys. 20%. You tell me what the catalyst was. It's been 2 earnings reports, and how bad has it been? I'm not buying it. Carvana trying to rebound from what happened to it just this past week. If you're not familiar, JP Morgan, one of the most best-run banks in the world, JP Morgan saying this is still a good company to invest in, while everyone else in the research tells you it's not. So we're going to find out what really happens here, but nothing but recovery right now. It's up $7.82, about 4%, at 185, and that's going to be Carvana. Sorry I wasn't showing you the charts, guys. It's my fault. I know better. I know better than to check, triple check, and double check. So apologize. You can't say no to food on the holidays. I can't, and I've tried. Told my time I had a snow day, and he showed up and worked. Okay, cool. Anyway, back to the markets themselves. 5 free memberships for the channel, guys. Appreciate you guys loving and supporting the channel. Tesla down from 488 all the way down to 400. Guys, look at Tesla all you want. It's been a couple of days, a couple of weeks where it's coming down right up into earnings. As you know, they've lowered their expectations on deliveries. They're extremely overvalued anyway. But look at Tesla. The market cap's $1.3 trillion. It's down $80 a share from the peak of just a couple of weeks ago. $80 puts you at 20% down right now. 20%. So things are falling off. SoFi was one of the biggest losers coming up into the new year, and now it's recovering that loss, up around 3.5%. Not bad. Earnings will be coming up soon for SoFi, but they're down, yes, almost 20%. Numera can't recover. Can't recover. I don't care what they do. They should come off my list. Oris, what a pump and a dump, huh? What a pump and a dump, eh? Pump it, dump it. Pump it, dump it. What does Morantz know? I don't know. Just enough. GameStop looking great today, guys. I like GameStop. Still holding that line. Let's go ahead and look at the weekly chart. Still looking hella good. Guys, remember when this 50-day moving average moves up into the 200-day and passes it, you'll see rockets. I'll be here for you. Still spread apart, and that's on the weekly. Go and look at the 4-hour chart. 4-hour chart shows us GameStop's holding that level, that they're consistent with the blue line that I showed you. Even today, coming down on the open on that 4-hour chart, still not touching that bottom level support. We should see us just step right up, right through it the next day. Let's go to the 2-hour chart. Let's see what it shows up there. So there's a 2-hour chart, still walking it. Still walking the dog, guys. Right there along the blue line on 2-hour chart, you see it. You see these averages moving across. Not bad. We should be able to have a step up here and feel good about it. We're holding at 200-day moving average for sure. On the 1 hour, same deal. Walking it. I love it. And then we get to 30 minutes. 30 minutes, not bad at all today, guys. That's a good little cup. We'll find our way out of it. And if we just go sideways, we just go sideways. But look at that. V recovery. Get right through it. Not a problem. And then on the minute chart, GameStop looking healthy right now. $31.60 on 6 million shares traded back and forth. That is the absolute open from last week. It being Monday, we're dead even, guys. We're just even. On a day where everything else is going up and to the right and going crazy, we're dead even. You really can't knock us down too hard. I don't know who they is. They are trying, but it wouldn't matter. Bitcoin, 101,000 right now on Bitcoin. As you guys can see, massive run over the last hour. On the daily chart, still not as high as it once was at 108,000. Somebody asked me how far do you think Bitcoin can go? Is it gonna fall down? Where's it gonna go? And I'm gonna talk on Bitcoin right now, but I want to put GameStop back on the list real quick. Okay, so let me tell you something about Bitcoin, guys. Oh, and before I do that, let me go over here. Sorry, I gotta open this up for you. This is a great little website. I don't know if you guys have heard of this website called GameStop, GameStop.com. Boom, boom. Okay. So before I talk about Bitcoin, let me put this out there. Thank you again for the 5 free memberships. Rocco, Top Water Crazy, Just a Guest, Nicholas, and Walter. Free memberships. Thank you guys so much. Abe killing it. Okay. So looking at the websites, and before we talk about Bitcoin, I'll talk about it in a minute. Hold on. So right here's GameStop website. Nothing new on the update. I looked at all the tabs. We were fine. They got rid of the holiday tab, which is fine. I'm not worried about that. There are some cards right here. Silver Tempest, they have them. Don Russ, I just opened that one up. These ones come out Q4. I believe these don't come out yet. These aren't available until February. I want to say. I don't know what the release date is. Did it tell you the release date? Somebody was talking about they bought oh, right there. Look at release date, February 28th of 2025. Somebody bought like 4 of them. So you can buy more penny sleeves. You can buy more of that. I'll end up getting in on this stuff. So people are loading up on cryptocurrency cards. Not me. The kids are they're more a fan of Pokemon and sports and everything else. So I'm going that route right now. Just whatever I can give to people. That's what I'll keep doing. But GameStop had a lot more cards. The bigger packs of cards for sale, the boxes, the cases. I wonder if it's still there, if they still have them. But they had cases here, and now they just have these. So, Prism, these are good ones. Exclusive green Prism, I don't mind. Yeah, so just everything's there, guys. I know that the hobbies are looking for. I go cruising TikTok, and I tell everybody when I'm in there, hey, guys, don't forget to get your stuff at GameStop. And they're like, really, GameStop? I show them all the time. Here's my portfolio, guys. Let me see. Right now, what price was this at? At $321, whatever. But yeah, I'm up $29,000 on GameStop. I'm okay. I'll just keep doing that. To have $29K in there, it feels good. We'll keep going, okay? And I'll check my messages later. Like I said, I'm trying to get out of here on time so I can do stuff for the rest of my day and tomorrow. Can't stop, won't stop. There you go. 1 minute chart didn't move shit. Yeah, exactly. Marantz, your lines are always on point. Roberto, I do my best, man. Hey, guys, just real quick before I take off and I got to go clip that interview that we did earlier. I just want to say thank you to all the supporters of the channel and me and what we do and the growth of this channel. I should have a better outlay, like an outlook on how I'm going to manage myself this year with the channel, when I go live, when I do videos and stuff like that. But there's some uncertainty there right now. I'm in transition for a lot of things that I'm doing in life. So when I have more time, I'll do more content. I had to take time out of today to have that interview done with Mark Faber. Actually, I had to put in for a vacation day just for that moment, and it was worth it to me because I'm trying to do what betters us. The more info we have and the more insight we have, the more informed we'll be. It's a lot of in. But trust me, I didn't have to do much. Mark was a great guy, and he did all that just because I wrote him an email and we talked. So I hope more people realize what this channel is and what the info is, and I know they will. We've been doing it for so long that it speaks for itself. So I just want to say thank you guys for this year. 2025 is going to be our year. I feel it. I feel good about it, and I'm going to keep going with it. So thank you for the support. You guys know the way it goes down, but I'll know more. I'll know more in the next couple of weeks. I'm waiting for a phone call today or tomorrow. We'll see if that phone call ever comes, but I'll figure it out from there. But thank you guys so much, and appreciate you guys. GameStop, can't stop, won't stop, GameStop. I'll be back. I got another message on my phone I got to figure out. So thank you guys so much, though. Peace.